Good evening and thank you for tuning into Iraqi Dinar Intelligence. Tonight's entire broadcast is dedicated to an intriguing development that is steadily and quietly gaining significant traction throughout the global financial community. Something truly unusual has been observed actively taking place concerning Chase Bank and its operational relationship with one of the world's most debated foreign currencies, the Iraqi Dinar, IQD. Specifically, the widely circulated 25,000 dinar note has suddenly re-entered focused, discreet discussions within influential international banking circles. Despite this internal focus, there has been no official public statement from Chase Bank or any other major financial institutions for many months, and the public record has remained stubbornly unchanged. Chase Bank's officially published currency exchange list still confirms no active public trading for the dinar, shows no new policy revisions, and provides no updated public statements, but operating far behind the public view, subtle and persistent internal adjustments appear to be quietly taking definitive shape. Technology updates, internal compliance team reviews, and rigorous reserve monitoring activities all strongly suggest that necessary operational preparation is currently underway, even while the official corporate headlines have maintained complete silence. In the entire sophisticated world of institutional finance, any significant, real change almost never initiates with a high-profile, public press release. It always begins much earlier with strategic, non-public movement occurring behind strictly closed doors. Over the course of the immediate past few weeks, consistent reports from a variety of reliable private banking contacts strongly indicate that Chase has discreetly reviewed and assessed its entire internal systems related to several key restricted foreign currencies. Among the currencies prominently listed for this review, the Iraqi dinar unquestionably stands out above the rest. The 25,000 dinar note, which was once immediately dismissed by most major Western banks as operationally impractical or hopelessly illiquid, has now drawn urgent, renewed scrutiny from the bank's highly specialized currency compliance teams. Why has this sudden focus emerged now? The most likely answer to this shift may not be found in mere rumor, but directly in observable structural reform. Iraq's core financial structure has demonstrably changed over the last 2 years of intense reform efforts. The Central Bank of Iraq, CBI, has greatly improved overall transparency, significantly tightened internal currency outflows, and substantially strengthened its digital control systems to effectively meet much more demanding global regulatory standards. These continuous, active efforts by the CBI have certainly not gone unnoticed by global institutions. For a massive institution like Chase, which naturally maintains substantial exposure to various international corporate clients operating within the Middle East, ensuring a state of immediate readiness for any future policy shift is considered an absolutely crucial component of responsible, essential risk management. If Iraq's proactive monetary policies continue on their current path of stability, the eventual re-establishment of a publicly recognized exchange channel for the dinar could rapidly become not merely a possibility, but a practical, imminent inevitability. Inside the operational heart of Chase Bank, these necessary internal system reviews are routine, but they remain profoundly significant actions. Before any institution formally adds or strategically reactivates a foreign currency for trading, several complex internal systems must be carefully aligned and updated. This includes comprehensive data reporting to the Federal Reserve, internal rate calculators, anti-money laundering (AML), compliance frameworks, and critical transaction codes. Quietly and systematically updating these key internal systems does not necessarily mean that a public currency exchange desk will open tomorrow morning, but it strongly signals a measurable and intentional mindset change at the corporate level. It clearly means a powerful, large institution fully intends to be immediately ready for future potential adjustments without risking the typical chaos associated with last-minute, panicked scrambling. This exact pattern of discrete, background readiness has been visibly observed before in other emerging financial markets. When Vietnam successfully undertook its complete banking system modernization, numerous major U.S. and European banks quietly prepared their internal systems for many months before any new public trading windows were officially opened. The institutional pattern is now clearly familiar and consistent. Initial silence, followed by subtle but deliberate system testing, and only much later, a formal public confirmation. Chase's observable internal behavior perfectly fits this established pattern. The specific focus placed on the 25,000 dinar note is especially insightful and telling. That particular denomination became highly symbolic for the many investors who first entered Iraq's currency market immediately after the early 2000s. For many years, those holders were routinely told their investments were essentially meaningless because Iraq's currency was too heavily managed or politically unstable to ever gain any real value. Yet, the fundamental economic conditions inside Iraq have been steadily evolving and maturing. The nation's vital foreign currency reserves have substantially grown in size thanks to consistently strong oil prices and much tighter domestic fiscal controls by the government. The historical gap between the official CBI rate and the parallel market rate, which was once an impossibly wide chasm, has recently narrowed dramatically to a manageable level. Inflation across the country has eased considerably, and new, advanced digital payment systems are slowly but systematically replacing the older, less secure cash-based trade practices. Each successful step taken in this reform process adds to the measurable credibility of the dinar. When any national currency successfully gains sustained credibility, the major global banks take immediate, serious notice, and they commence the slow, necessary process of securely rebuilding key operational connections. Chase Bank's quiet, but thorough, technical system checks strongly suggest it is determined not to be caught completely off guard if and when Iraq's aggressive financial reforms reach the stage where secure international exchange once again becomes completely feasible. Highly respected financial analysts emphasize that this 25,000 dinar focus is strictly not about reckless market speculation, but entirely about strategic institutional timing. Every significant, major global currency shift begins its process long before the general public is even remotely aware of the impending change. The current, substantial strength of the US dollar, the ongoing global diversification of the oil trade market, and the steady, determined shift toward a multipolar global financial system have all collectively placed Iraq in a pivotal strategic position. Its significant energy exports are actively feeding the vast Asian markets. Its massive foreign reserves are now reliably backed by actively growing partnerships with various regional powers, and its new monetary policies now directly reflect full cooperation with established U.S. Treasury standards and the International Monetary Fund, IMF. If Iraq can successfully maintain this determined course of reform, a policy-driven controlled appreciation or formal revaluation of the dinar becomes a practical, executable policy tool rather than a far-fetched fantasy. And for a global banking titan like Chase, immediate readiness is everything for its corporate reputation. Being fully prepared operationally before the market moves is the key differentiator that reliably separates the leading institutions from those that merely follow later. Customers who visit local Chase branches actively inquiring about dinar exchanges are still currently told politely and firmly that the bank is not yet officially handling that specific foreign currency. That provided information is completely accurate and reflects the current public policy. However, what has profoundly changed behind the scenes is the noticeable tone and content of those corporate responses. Where there was once a complete, outright dismissal of the dinar, there is now a measured and notable caution. Staff are now reportedly advised not to promise anything, not to actively speculate, but critically, also not to deny the strong possibility of future updates or policy revisions. That noticeable shift in corporate language may appear small and insignificant, yet in large-scale corporate banking, the specific language used very often reflects current policy and an institutional transition. Chase's current communication strategy is perceptibly aligning with quiet internal expectation rather than outright, strong rejection. It precisely mirrors what was observed years ago immediately before several emerging market currencies were officially reintroduced to the global financial systems. It is a subtle, yet unmistakable, early institutional signal. The wider financial picture vividly points to Iraq's strong and determined commitment to systematically rebuild complete faith and confidence in its national monetary system. Over the course of the immediate past year, the Central Bank of Iraq has significantly expanded its use of secure electronic transfers, introduced much stricter controls on all dollar sales, and actively collaborated with key U.S. financial regulators to rigorously combat pervasive money laundering activities. These essential reforms have actively increased measurable confidence among all of Iraq's international financial partners. The country's massive foreign reserves now stand at record-breaking high levels, providing a robust financial cushion that is perfectly capable of supporting any future gradual strengthening of the dinar. Oil revenues continue their strong and consistent flow, and Iraq's vital trade relations with all neighboring countries are significantly broadening and deepening. These are undeniably not the routine actions of an economy that is failing or collapsing. They are the clear and visible markers of an economy that is actively preparing for comprehensive reintegration with the global financial world. Chase Bank's silent, meticulous technical review may simply be a profound and necessary institutional reflection of this newfound financial confidence. Economists who are closely monitoring this critical trend suggest that the 25,000 dinar note could rapidly become much more than just a mere collector's item. While absolutely no one realistically expects it to reach its historic value overnight, even a modest, policy-driven revaluation could have substantial symbolic and deeply meaningful economic effects. Even a very small, initial adjustment would immediately restore crucial purchasing power for all Iraqi citizens and successfully encourage sophisticated foreign investors to aggressively reconsider Iraq's immense economic potential. For major commercial banks, the significance of this shift lies not primarily in the final exchange amount, but rather in the immediate accessibility of the currency. Once any national currency is officially tradable and exchangeable through all standard, recognized banking systems, it immediately gains irreversible legitimacy. The very moment that Chase or any other major U.S. bank successfully enables such transactions, it sends a clear, unmistakable signal to the world that essential global confidence in the dinar has been completely restored. The public's intense fascination with the dinar possesses a long and deeply complicated history in modern finance. Numerous speculative groups and online internet forums have actively circulated countless predictions for many years, with many being highly exaggerated and demonstrably false. But operating quietly underneath all of those fantastical stories lies a legitimate, ongoing process of profound economic rebuilding. Iraq's central bank has never publicly promised a sudden, unearned financial windfall. It has consistently promised deliberate and gradual, measured reform. The clear difference now is that powerful global institutions are actively paying close attention. The IMF's most recent assessments have publicly praised Iraq's recent fiscal discipline, and new data from its key oil exports strongly suggests reliable, continued growth throughout 2025. Each positive indicator adds another crucial layer of future possibility, and influential institutions like Chase are tactically positioned to adapt their systems quickly once a clear, official green light appears on the horizon. In the operational background, U.S. monetary policy continues to fundamentally influence the trajectory of every emerging market currency worldwide. The Federal Reserve's ongoing interest rate decisions inevitably create powerful ripple effects across all global currency systems. When the U.S. dollar rapidly strengthens, emerging currencies like the dinar very often temporarily weaken in response. When the U.S. dollar begins to soften its position, these same currencies suddenly find crucial room to naturally gain inherent value. Analysts strongly note that 2025 may realistically bring a moderation in U.S. interest rates, which could strategically open the operational door for selected currencies to naturally gain value. That potential financial scenario perfectly aligns with Iraq's ongoing reform timing. Preparing all necessary systems now is simply a demonstration of good institutional strategy. It requires very little cost to be fully ready. It costs a great deal more to be completely unprepared when a major opportunity finally arrives. The Chase Bank twist, as key observers are now calling this internal focus, may not be an attention-grabbing headline today, but in historical hindsight, it could potentially be accurately viewed as the very first public clue of a much larger, impending financial transition. Every major institution meticulously follows its compliance procedures before taking any kind of move that could attract intensive regulatory attention. By quietly and proactively checking its internal banking frameworks for restricted currencies like the dinar, Chase strategically positions itself as fully compliant well ahead of the curve. That action is not based on mere rumor, it is simply standard operating procedure for a complex financial system that must consistently anticipate tomorrow's certain realities. When the dinar becomes fully and officially recognized again, if and when that moment officially happens, those proactive banks that prepared their systems early will already possess the necessary mechanisms to successfully process all exchanges without unnecessary delay. Beyond the critical policy and banking aspects, this entire story also carries significant emotional weight for many. Millions of people, both abroad and within Iraq, have patiently waited many years to finally see the dinar regain financial respect and substantial value. For all Iraqis, the outcome represents much more than mere money. It represents financial sovereignty and national recovery. For the many investors abroad, it profoundly represents unwavering faith in a nation's eventual comeback story. When powerful institutions like Chase quietly and diligently prepare their systems, it offers a touch of powerful legitimacy to those long-held hopes, even if no one is officially willing to publicly acknowledge it just yet. The 25,000 dinar note, with its striking, bold design and deep national history, may soon quickly transform itself from a simple speculative token into a fully functioning, respected part of modern global finance. Financial experts consistently remind all viewers that every major currency transformation event follows an identical, predictable sequence: financial stability, policy reform, international cooperation, technical readiness, and finally, full public conversion. Iraq is currently moving through all of these necessary steps deliberately and steadily. Each new trade agreement, each U.S. Treasury statement, and each IMF meeting adds another crucial layer of financial credibility. As the credibility steadily builds to a critical mass, the strong pressure to intentionally keep the dinar artificially undervalued rapidly decreases. When all the economic fundamentals fully align, historical change very often happens both rapidly and with great force. For the immediate present, it accurately remains a calculated waiting game, but it is certainly not an empty or stagnant one. Every quiet, internal adjustment made at a major global bank is a strong suggestion of continuous progress in motion. Chase's apparent readiness perfectly reflects the quiet, growing financial confidence that is returning to the entire region. It is strictly not about hype or speculation, it is fundamentally about serious institutional preparation. No official at the bank will publicly confirm anything at this stage because institutions of that massive scale operate strictly on verifiable regulation, not on unproven rumor. Yet, complex financial systems consistently leave clear operational fingerprints: small, subtle software updates, crucial code revisions, and specific internal communications that clearly show the complex machinery of readiness turning efficiently in the background. Those sophisticated observers who meticulously monitor such critical details are clearly seeing a very strong pattern forming. It is not hype, it is a visible, structured infrastructure build-out. For those still holding dinar, keen awareness and persistent patience remain absolutely essential. There is absolutely no guarantee of immediate change, but the objective financial indicators are clearly and strongly aligning. The global financial map of 2025 looks profoundly different than it did even 5 short years ago. Shifts in geopolitical partnerships, expansion of digital banking, and changes in oil trade settlements all significantly influence currency strategies. Iraq, strategically positioned between the East and West, has leveraged these dynamic shifts effectively. Its national currency may soon finally reflect that verifiable growing strength, and when that inevitable moment arrives, institutions like Chase will already possess the operational readiness to act immediately. Until that time, every observer, from influential analysts in New York to seasoned traders in Baghdad, will continue diligently watching for these small, subtle signs of internal movement. Sometimes that sign is a quiet change in a teller's tone, a new line added to an internal report, or a subtle update to a database. Those individual details, when successfully combined, form the true narrative. The Chase Bank twist regarding the 25,000 dinar note is one such critical detail. Subtle, incredibly easy to overlook, but highly probable to be considered historic in subsequent hindsight. As this pivotal story continues to actively develop, one single truth remains absolutely clear: the era of unilaterally dismissing the Iraqi dinar as financially irrelevant may be rapidly coming to a definitive close. What is prepared to replace that era could be one of profound, measured financial respect, grounded entirely in sound economic progress, not mere speculation. Chase Bank's strict silence might not be true corporate secrecy, it might simply be discipline, the precise kind of discipline that is consistently required immediately before a new, significant chapter in global finance definitively begins. The broader financial world will emphatically not announce this critical turning point with a massive fanfare. It will instead arrive quietly and efficiently as all the complex systems fully update, as the national numbers precisely align, and as nations confidently regain their long-lost financial balance. The 25,000 dinar note, once a mere symbol of what was unfortunately lost, may soon proudly stand for everything that is actively being rebuilt. Thank you for joining us on Iraqi Dinar News. We will continue our dedicated monitoring of all key developments at Chase Bank and across the global currency markets as this monumental story evolves. Stay alert, stay fully informed, and as always, approach every potential financial change with both astute caution and intense curiosity, because in the complex world of finance, the most profound and powerful shifts almost always begin without any audible noise.